after this break with another important person from India, Gagan Banga, Vice Chairman, Managing Director, Indiabulls Housing Finance, joins us. We are back in a jiffy.
"20 years of leadership in business and beyond."
So it's been positive as far as the breadth of the market is concerned. Okay, our guest is waiting by Gagan Banga, Vice Chairman and Managing Director, Indiabulls Housing Finance. Good morning, Gagan. Good to have you with us. Has the end of 2019 been any better? Has there been any improvement in terms of access of funds? Are banks opening their kitty a little more?
Yeah, I think the worst for the sector is clearly behind. There has been quite a significant change in the way that the markets are approaching, I would imagine, most large NBFCs and HFCs. For us specifically, once the government of India's affidavit got filed in the courts, etc., big turnaround in sentiment, and clearly the last month and a half has been extremely strong for the company. The results will be out in a few weeks, and it will all be there to see. But yeah, access to funding and all of those issues are clearly behind both the company and I would imagine a large part of the sector as well.
Okay. Gagan, hi, good morning. Which is interesting because your paper still continues to get traded at a very high rate, and you can correct me if I'm wrong, but I'm told that Indiabulls might have started a buyback of long-term bonds, 1,000 crores thereabout.
Yeah, so the issue with our bond markets has been historically that they tend to be shallow. The secondary market is extremely shallow, very few players. So given that, we've taken an initiative. We are engaged with the broader market. We have been in the past, over the last 1.5 years, been buying all our near maturity papers. So whatever is maturing over the next 90 days, we tend to come and buy that back in the first, second week of every quarter. But now what we have engaged with the market is to also buy back some of our securities maturing in 2021. And that is both a show of strength as well as an opportunity as far as we see it. We will be putting out large sums of monies to work over the course of the next couple of days and then again in the middle of January. I'm quite sure that with this display of liquidity, especially for long bonds, the bond prices have to mature to levels which are more commensurate to the credit rating.
Okay, that's a big statement. Can you confirm the number for me, Gagan? 1,000 to 2,000 crores.
That's right. We will be putting those kind of monies to work, between 1,000 to 2,000 crores between now and end of January.
Okay, 1,000 to 2,000 crores. Gagan, hi, good morning. I want to understand what's the latest as far as the developer loan book is concerned. How is that entire piece shaping up? And what are the unforeseen losses for which you have sort of made some kind of buffer or provisioning? What can we expect, say, over the next 3 to 6 months?
Yeah, so on just to step back, the more longer term strategy of the company, at least I wouldn't say long term, but at least over the medium term, is to continue to roll back the wholesale book. That's a process that we started about a year ago, and every quarter we're trying to just make it the pace get further accelerated. We've seen some extremely good traction through the course of this October to December period as well, and that traction continues over the next 3 to 4 weeks is what I visualize. Our endeavor would be that between today and March, we would be rolling back our wholesale book by, in the ballpark of about 7,000 crores or $1 billion or so. So that's the goal as far as the short term is concerned. We are ramping up our retail disbursements. So at one end, our loan AUM will decrease because of the wholesale book, but it will continue to increase for the retail book, and over the course of the next few months we will find the bottom, and then the retail growth will take over. So that's the strategy as far as the overall book growth is concerned. Now on asset quality, we have been providing well ahead of time. We have used all one-offs to create provisions, which is why we are sitting on a pretty healthy provision cover. If we add up all of our provisions, then we have a negligible net NPA. And that's a policy that we will continue to follow. We also have the stake in our UK bank, which if required, we can always liquidate. It has some extremely credible shareholders with very deep pockets, so we can always liquidate that. That's worth about 3,500 crores. And our pre-provisioning operating profits continue to be in the range of about 800 crores. So between all of this, I think we have close to about a 5,500–6,000 crore kind of a buffer that we can use given any circumstance arising in the wholesale portfolio. The guidance that we've given for NPAs is that they would be in the range of 1 to 1.5% on the net side and 1.5 to 2% on the gross side. And one is quite confident that through the course of the next few quarters, one will be able to maintain the NPAs within this range. We are working with our developers to find solutions. The portfolio is attractive for a lot of refinance, which is why we continue to see that happen by domestic banks, and practically every week or two there is some new story talking about some Indiabulls construction finance loan or a rent discounting loan getting refinanced.
Gagan, when you last gave us your numbers at the end of Q2, your balance sheet was 82,135 crore. What might it be by the end of the year?
By the end of the fiscal year, it should be in the handle of by the end of the fiscal year, it will be in the handle of 75 to 77,000 crores.
Okay, and you think that FY21 as well, you may have to bring it down further?
No, I expect FY21, the balance sheet will grow to about 85,000 crores, and the overall loan book will grow to about 95,000.
Okay. What about securitization? Has that market settled after that jitter it got with DHFL guys, and I think even ILFL guys not getting their debentures serviced, not getting their securitized pools serviced? Now, is the securitization market alive and kicking?
As I understand, the market is consolidating. So what I've always held the belief is that this market is a very self-correcting market, and basis how underlying portfolios perform, few underwriters will find their pools being sought after, and few others may not have that kind of traction. As far as we are concerned, we are maintaining a pretty steady rate of securitization based on our cash flow requirements. There was a minor hiccup, soon after the Diwan housing issue, where some court had, or there was an opinion that a court may have held that those monies can't be transferred. Once the clarification came, that whole issue is behind us. See, we have to appreciate that IBC in India is a pretty new law, and the way that the system is currently dealing with bankruptcy is also pretty new. So this law will take a couple of years to settle down, and we will have these situations. But as I understand, the key stakeholders, which is the Reserve Bank of India, Government of India, and all the banks, all three stakeholders are extremely keen to see the development of the securitization market, and we haven't even touched the tip of the potential of this market. From an ALM perspective, there is no better product for a housing finance company which originates long loans of durations of north of 20 years. I don't being as well matched, and therefore this would be a go-to product, and I'm delighted that everybody is interested in seeing the development of the market.
Okay, I have a bigger question to ask, but just to follow up, this Oaknot's stake sale, will it happen in Q4?
I don't see the need of that happening, neither from a provisioning requirement nor from a liquidity requirement. We are quite comfortable on both. That said, we are engaged with both bankers as well as a few of our existing investors. So at an appropriate time, that it's sure that we will look at transacting on the banks. But at this point in time, the bank continues to be the fastest growing bank in Europe. It's created a lot of value for the organization, and it's something that we'll hold on to.
Fair enough. Now, the question that I was about to ask you, Gagan, The whole MCA issue, while there was no clean sheet, it was said that those loans were repaid. After that, I think your counsel argued in court that there should be an interim stay because business is suffering, but that wasn't given. So tell us, how's the day-to-day business panning out then? Is it still hurting?
So it was, as I said on your channel and a couple of other channels also, that it was hurting in the period September, October, when all of this uncertainty had come on. But the more important thing about, as far as all these allegations and whatever was the prayer, etc., was concerned, that somebody should look into the books. I will correct you. The MCA affidavit is pretty clear, and it very clearly mentions that these loans are standard accounts, they've been repaid, and so on and so forth. If there is any quid pro quo, if there is anything else, it would have mentioned the illegality around any of those transactions, which it clearly does not mention. And if somebody has been given money and that money has come back, I don't see how there could be anything wrong done to any stakeholder of the company. If a loan has been given in normal course of business and it is being serviced, that's our business. We are supposed to be giving loans. So the affidavit was as clear as one can get in how the legal framework works. And I think that is a very big achievement for the company, given how the foundation of the company gets settled from here, and for the growth of the next 10 years. As a first generation company which has grown, I'll leave you with two numbers. In the last 10 years, the company's balance sheet had grown something like 12 times, from 10,000 crores to 1,20,000 crores. That's a lot of growth for a decade. In the last 10 years, the company has also distributed over 11,500 crores of dividends. That's also a very large shareholder value creation which has happened. Now, when that happens, there are always questions as to how are these guys growing and so on. And in some ways, I welcome, and I have welcomed in the past, that anybody who wishes to come and look into the books, please come and look into the books, but please get this done in good time and allow us to get back to our work, which has happened. The inspection is over, the affidavit has been filed, and we are back to our work. And as I mentioned, the last 30 to 45 days have actually been extremely good for the company.
Okay, so if you can just tell us, what are your sources of funding in 2020?
So through the course of 2020, one of the largest sources of funding would actually be more internal, as we look to unwind our wholesale book, and that could potentially give as much as 40 to 50% of the funding that we require to achieve our AUM growth of about 20%. The balance 50% would be coming via securitization as well as onward term lending, which the banks are giving to us. As I mentioned in the past, given the shallow nature of the bond markets and the fact that we are now completely granular, whatever were the wholesale loans are only being run off, the tenor of our assets only increases. There is no bond product outside of what insurance companies and provident funds give, which is even a 10-year product. We would be writing loans which are like 10 to 15 years. So for us, it will be coterminous term loans, which come under the onward lending platform, as well as securitization, which would be the primary sources of external funding. All of these come to us in the price point of between 8 and 9%, depending on the product that they are financing, and leaves us with a spread of about 2.5%. Now, that's a very, very healthy granular business to build, and over a period of time, we expect our ROEs to be just below or just around 20%. So that's the target ROE that the company is proposing to work on and executing. And fortunately, all parts of our strategy that we articulated in mid-October, as we end December, all parts of that strategy are kicking and working. And one is confident that both a 20% kind of an AUM growth through fiscal 21, as well as a high teen kind of an ROE in fiscal 21 itself, is something which is achievable.
Okay. That's good to hear. I just have one last question on that affidavit, and I'm reading out of it. it is submitted that this ministry has received the inspection reports of IBVL and IBHL on 1911 and 1511 respectively, and the violations pointed out in the inspection reports are being examined. Have they gotten back on, after looking at the violations, what is their comment?
Yeah, so that engagement is on, and I can confirm to you that the violations which are being referred to are violations which are all compounding in nature. They would arise out of anyone coming and conducting any kind of inspection. Even when the regulators, which is National Housing Bank and RBI, come, there are feedback or operational violations that they would highlight. These are in those nature. There is nothing beyond compoundable violations.
And would the same be true about the NHB observations as well? We are told that there are about 40 to 50 observations from NHB as well, Gagan. I mean, you can correct me if I'm wrong.
So as far as RBI and NHB inspections are concerned, you know, that feedback is practically continuous. They are financial regulators of the company, and I think as we speak, the financial results of the company, which got declared in September, are prior to which these inspections had gotten over, are a reflection of the nature of whatever was the feedback given to us. Our NPAs actually came down quarter on quarter, and our capital adequacy went up. So that's what I would like to comment as far as...
Be good to hear. Thank you very much, Gagan Banga, for joining us and patiently answering so many questions. Here's hoping that 2020 is a much better year. And of course, as per your guidance, it is going to be a better year. You trough out at 75,000 balance sheet size and going on into perhaps 85,000 by the end of FY21. That's the word coming in from Indiabulls, and the stock has risen about 1.5% in the course of that conversation. So with that, we get back to the market and the indices. Just a little bit of pressure, a third of a percent.
Oh yes, just see, I mean,